Dear colleagues, distinguished guests, ladies and gentlemen, here in the room and digitally watching the live stream, welcome to Tallinn. It's a great honor to welcome you all to the Baltic Digital Euro Conference, Payments and Policy in the Changing Environment, organized together by Eesti Pank, Latvia's Panka and Lietuvas Pankas. We are privileged to be joined by such a distinguished audience and high-level speakers whose insights will guide us through the opportunities and challenges ahead. The expertise and vision will set the tone for our discussions and inspire us to think about the future. My name is Rainer Olt, and I will be the moderator of the day. But not only, as I'm responsible for the payments, catalyst, operator, and oversight functions at the Eesti Pank, I will join one panel later today. But now a little bit housekeeping. The agenda and the bios of our distinguished speakers are available online. Please use the QR code on the screen. Throughout the conference, we will take questions from the room only. And when asking questions, please also identify yourself. Microphones will be distributed in the room. On the tables, many of you already found leaflets explaining digital euro. I recommend you to take one because then you have it also on paper, so it's available offline. Without further ado, let us begin. And for the opening speech, let us warmly welcome on stage our host today, the Governor of Eesti Pank, Mr. Madis Müller.
Thank you very much, Rainer. Dear colleagues, distinguished guests, ladies and gentlemen. It is my real pleasure to welcome you today in Tallinn, and in particular here in the Independence Hall of Eesti Pank. This hall has deep historical meaning for Estonia, making it a symbolic and inspiring place to discuss the future of money in Europe. Just as independence gave us freedom and responsibility to shape our own path, digital euro will give us the opportunity to shape Europe's financial future and the digital legal tender as a symbol of unity and resilience. Digital euro is not just about technology. It's about trust, usability, and integration across Europe. As Europe navigates a rapidly changing global economy, digital euro can strengthen our strategic autonomy while providing people and businesses with a modern and reliable payment solution. Meeting here in the Baltics, a region known for digital innovation, reminds us that practical solutions and real-life adoption matter as much as policies and technology. Today, we will explore where the project stands, the challenges ahead, and how digital euro can bring tangible benefits to Europeans. Cooperation will be key. Central banks, regulators, businesses, and payment service providers all have a role to play. Payment service providers will be important, bringing digital euro to life for consumers and merchants. Their work ensures that people can use it safely, conveniently, and reliably in their everyday life across Europe. Ladies and gentlemen, digital euro is also a real European project. Its success depends not only on political determination and technical competence, but also on people's trust and their conviction that it will make their lives simpler and safer. Listening to people and businesses is equally important. Surveys and consultations across Europe, including here in the Baltics, show interest, but also questions from the public. This feedback should guide our work, ensuring that digital euro will be a practical, user-friendly, and also a meaningful payment solution. This conference is our opportunity to exchange ideas openly, test assumptions, and build a shared understanding of the road ahead. I encourage everyone to participate actively, whether you come from the public sector, a commercial bank, a fintech company, or academia. Together we can take another important step towards a digital euro that works for Europe. Thank you all for being in Tallinn. I'm looking forward to a lively and constructive discussion today.
Thank you, Madis. Thank you, Madis. Indeed, our agenda provides all of us the opportunity to learn and discuss about digital Europe from different perspectives, and today's agenda is ambitious, but it indeed reflects the urgency and importance of the issues we face. Our day will start with more high-level policy aspects and then continue throughout the day into more practical implementation questions and issues and opportunities. Next, let us start with the first session then. The policy keynote speeches followed by a fireside chat, giving all of you in the Independence Hall the opportunity to engage. So now, let us welcome on stage for the first opening policy keynote, the European Commissioner for Economy and Productivity, Mr. Valdis Dombrovskis.
Honorable Mr. Governor, Excellencies, ladies and gentlemen. Good morning, everyone. Tere hommikust. It is always a pleasure to return to beautiful Tallinn on the shores of the Baltic Sea, which in recent years has become somewhat of a NATO lake. I am very pleased to participate in this forum, which gathers the views and insights of such distinguished speakers on such an important priority. Each of the Baltic states has undergone a dramatic economic transformation over the course of the last 2 decades. Membership in the EU and NATO, along with joining the euro area, has clearly provided stability, security, and opportunities needed for our economies to finally realize their full potential. This strong performance also endorses the Baltic states' embrace of innovative technologies. And nowhere is this commitment more evident than in Estonia, which has earned a reputation of the world's most advanced digital society. So it's particularly appropriate that we meet in Tallinn to discuss the opportunities that the digital euro presents. Today, I would like to focus my remarks on how the digital euro can improve Europe's strategic autonomy and enhance our preparedness to respond to emerging threats. But first, allow me to begin by providing a broader context for the need to introduce the digital euro. Technology continues to evolve at a breathtaking rate, transforming the way we live, work, and interact with each other. And we must continuously adapt to keep up. This also includes how we use our currency. Today, more and more Europeans are choosing to pay digitally. The share of cash payments in the euro area between 2019 and 2024 has dropped from 72% to 52% at point of sale. In fact, Estonia ranks among euro area countries with the lowest share of cash payments at the point of sale and the highest number of card payments per capita. The digital euro is designed to respond to the challenges and opportunities presented by this transition. Actually, Europe did not reap the full benefits of the digital revolution brought about by the internet. We are still paying a price for this, with a productivity gap between the EU and US today being largely explained by the tech sector. The digital euro presents another important opportunity to embrace technology that will protect, facilitate, and drive future economic growth. Turning now to the digital euro's role in improving Europe's strategic autonomy. In a more fragmented world where transactional diplomacy is increasingly replacing multilateralism, the EU must become a stronger global actor. This means reducing dependencies that might impede us from pursuing strategic policies in line with our own interests and values. Today, the space left behind by the declining cash use is being largely covered by non-EU payment solutions. In fact, international card schemes are dominating the European retail payments infrastructure, with 13 euro area countries relying entirely on international card schemes for card transactions. And Estonia is among those countries where international schemes fully dominate the payment card market. This strong dependence of the European retail payments landscape on foreign players represents a weakness in terms of our strategic autonomy. Ceding technological control over to the EU's economy entirely to others impedes Europe's ability to act autonomously on the world stage. It leaves European payment systems vulnerable to threats to withdraw or changes to the services provided by these international providers. It risks relegating Europe to the position of policy taker instead of policy maker. The digital euro can help counter these risks by ensuring that the euro area retains control over its financial and payments infrastructure. It can instantly provide a pan-euro area means of payment and also support European private initiatives scaling up across the euro area. The digital euro would also benefit merchants who would pay transparent, lower fees for accepting digital payments. It can be an important pillar by strengthening EU strategic autonomy by increasing the euro's resilience vis-à-vis other currencies, payment systems, and stable coins not denominated in euro. So there is a great and growing strategic importance to the digital euro project in view of quickly changing and challenging geopolitical landscape in which Europe has to find itself. Introducing the digital euro is a statement of our determination to ensure that Europe will decide its own destiny in this increasingly fragmented world. Secondly, with regard to preparedness. Here, from the Baltic states, we can see very clear that Europe faces a new reality marked by growing threats and deep uncertainty. Since Russia began its full-scale invasion in Ukraine, we have seen a fresh way of sabotage, foreign information manipulation and interference, electronic warfare, and hybrid and cyber attacks. Almost every day now we see efforts to test, probe, and provoke by violating the Union's airspace, including here in Estonia. The Baltic states have been consistent in warning their partners against the risks posed by Russia and the Kremlin regime, but not everyone sees the danger. In this context, policymakers at every level have a responsibility to take all possible steps to reduce our vulnerability to disruptions and attacks. This is why earlier this year the European Commission came forward with a preparedness strategy, our action plan to effectively respond to emerging threats. The rapid digitalization of our societies also comes with increased exposure to cyber risks. And European payment systems are not immune to these threats. By providing a digital means of payment built on European infrastructure and standards, the digital euro reduces the dependence of our payments landscape to third country providers. The Commission's proposal also contributes to preparedness by ensuring the digital euro's offline functionality, enabling payments to take place even amidst connectivity outage situations. Digital euro transactions will be also protected by the Digital Operational Resilience Act, which ensures that financial institutions operating in Europe can withstand, respond to, and recover from ICT disruptions such as cyber attacks or system failures. The digital euro can therefore play an important role in reducing vulnerabilities and enhancing our preparedness by improving the resilience of our payment systems. It is important to note here that digital euro will complement and not replace cash. A sign of European Commission's determination to safeguard the right to pay in euro cash and have easy access to cash, the Commission proposed a regulation on the legal tender of euro cash alongside with our digital euro proposal. Allow me now to provide a brief update on where we are in the legislative process to make a digital euro a reality. The European Commission tabled its legislative proposal for digital euro already 2 years ago. Since then, we had seen slow but steady progress. Today, discussions remain ongoing in the Council and the European Parliament. It is normal for negotiations on such a complex and consequential proposal to take time. However, given the challenges I already mentioned, there is now a growing urgency to reach political agreement and to address remaining open issues. That's why I welcome the Danish presidency's ambition to reach a common approach in the Council by the end of the year. The time to act is now to give both the ECB and the private sector the legal certainty needed to start preparing for the digital euro. And such legal certainty can only be achieved by the adaptation of the regulation. To conclude, ladies and gentlemen, our currency must continue to evolve alongside the geopolitical and technological shifts reshaping our world. The euro has become a mark of Europe's economic strength and a symbol of Europe in the world. In 2026, the euro area will welcome its 21st member, Bulgaria. The currencies that will power the prosperity of 21 euro area countries must now fully embrace the technologies of the 21st century. The digital euro is not just an innovation. It is imperative to promote our strategic autonomy, improve the resilience of Europe's retail payments, and harness the opportunities of the digital age. Thank you once again for this invitation to speak here in Tallinn, as Tony's drive in digital policies will be instrumental and progressing this file towards the successful outcome is key. Thank you very much, and I look forward for today's discussions.
Thank you, Mr. Dombrovskis. Very inspiring. Now let us continue with the second policy keynote and welcome on stage member of the Executive Board of the European Central Bank and the chair of the Digital Euro High-Level Task Force in the Eurosystem, Mr. Piero Cipollone, please.
Dear Governor, dear Commissioner, dear all, it is a pleasure to be here in Tallinn and to speak at this conference. I often think of the ECB role as the guardian of the euro. And the euro is more than just a currency. It is a commitment to stability, to unity, and to a shared European destiny. A destiny built on peace and prosperity. Yet, as we look at Europe's borders, not too far from here, the challenges to peace and prosperity are all too visible. At the ECB, our aim is clear: to uphold Europe's economic and financial stability in a world that never stands still. Today is an opportunity to discuss one vital element in our ongoing efforts to deliver stability. That is, ensuring that central bank money, our sovereign money, which Europeans use every day in the form of cash, remains universally accessible for everyday transactions. To achieve this, cash needs to be available not just in physical form, but also digitally. As a legal tender, a digital euro could be used whenever digital payments are accepted. it would preserve our freedom to choose how we pay. In my speech today, I would like to focus on how the digital euro will bolster Europe's unity, safeguard our autonomy, and strengthen our resilience in the face of ever-evolving challenges. Commissioner has already touched upon many of these issues, but this to tell you that we think alike on this theme. So let me start with the digital euro contribution to European unity. When the Baltic states joined the euro area, it was not just an economic decision. Sharing a single currency also has a strong geopolitical dimension. My predecessor at the ECB Executive Board, Fabio Panetta, once remarked that our monetary union is as close as it gets to a collective economic defense clause. An attack against one of its members would be an attack against all of them, because it would affect a key element of our shared sovereignty. Sharing a common currency also fosters a sense of belonging and transcends national borders. It is also reflected in citizen support for the euro, which is rooted largely in shared values. It provides a powerful anchor of stability, cementing European trust in their money even in times of crisis. The bedrock of our currency is central bank money, embodied by banknotes that we have in our wallets. When Estonians, Latvians, and Lithuanians hold euro banknotes in their hands, they hold a tangible reminder that they are part of a united Europe. In a world that grows more fragmented by the day, there are strong reasons to preserve and reinforce our money in the years ahead. That is why we are designing a new series of banknotes which will celebrate our shared culture and Europe's natural heritage. And that is why we are getting ready to issue a digital euro. As payments become increasingly digital, central bank money must evolve to keep pace and remain an option for all the people of Europe. As the role of online payments has grown, the role of cash in all day-to-day transactions has been declining at a fast pace. Commissioner Dombrovskis just reminded us the number on the decline. Alongside banknotes and coins, the digital euro would ensure that European people and business can pay digitally using sovereign money anywhere in the euro area at all times. Let me now turn to why the digital euro would safeguard our autonomy and economic security. As the use of cash declines, Europe is increasingly dependent on non-European payment solutions. This puts us at the mercy of decisions made elsewhere. The fact that Commissioner Dombrovskis and myself are repeating this issue tells you how deep we feel about that, how important it is to remind everyone that we should be the owner of our own destiny. 2/3 of card-based transactions in the euro area are processed by international schemes. And again, today, in 13 out of 20 euro area countries, daily in-store payments depend entirely on these schemes. Estonia, Lithuania, and Latvia are a case in point. This excessive dependency not only hampers competition, resulting in higher fees for merchants and translating to higher prices for consumers. It also calls our sovereignty into question by threatening our ability to act independently in one of the areas most critical for the functioning of our economies, that is money. The digital euro would ensure that Europeans can transact seamlessly and securely without being dependent on decisions made outside the EU. With the digital euro, Europeans would remain in control of their money, their choice, their future. The digital euro would also empower European payment companies, including Baltic banks and fintechs, by providing a powerful infrastructure, open standards, and a European-wide acceptance network. A digital euro would allow these companies to scale up their solution across the continent in a cost-efficient way. And they would be able to use the digital euro platform to offer innovative services that would make life easier for consumers and businesses, as evidenced in the report we published last Friday, which presents the findings from our innovation partnership with market participants. The digital euro would also strengthen European resilience. Payment systems are as critical as other infrastructure like energy. And when critical services fail, people expect public authorities to maintain continuity. This is not hypothetical. Incidents like sabotage in the Baltic Sea remind us how fragile our system can be. The digital euro, alongside physical cash, would preserve the resilience of our payment system through three critical features. First, its infrastructure will be distributed across at least 3 regions, each equipped with multiple servers. So in the face of a cyber attack or other crisis scenarios, digital euro payments could continue. Second, the ECB will provide a dedicated digital euro app, which will let you switch seamlessly between providers. This means you will be able to continue using your digital euro even if some providers are hit by an outage. Third, the digital euro will also function offline, adding another layer of security and reliability. This feature has benefited from the active contribution from several euro area countries, including the Baltic states. Allow me to conclude. At its core, our shared currency is a declaration. We choose unity over division, community over isolation, and common destiny over fragmented paths. This idea is at the very heart of our work on the digital euro. As the ECB President, Christine Lagarde, recently said, quote, "The digital euro is not just a means of payment. It is also a political statement concerning the sovereignty of Europe," close quote. The digital euro offers a digital form of the very same cash that we all use every day, from Lisbon to Tallinn. It would be a European solution based on European infrastructure. In the Euro Summit statement in March, European leaders emphasized that in a more fragmented and digital world, accelerating progress on a digital euro is key to supporting a competitive and resilient European payment system and contributing to Europe's economic security. But a project of these scales requires the expertise, creativity, and commitment from all stakeholders, especially the national communities, who brings local insight and innovation from every corner of Europe. Through close dialogue and active engagement at events like today's, we can shape a digital euro that will reaffirm Europe as a place where innovation serves the public good, where resilience meets opportunity, and where our shared currency continues to unite us in an increasingly challenging world. Thank you very much for listening.
Thank you, Piero. I could not agree more, but I would like to ask you to come on the stage again and take a seat for the fireside chat. Now, ladies and gentlemen, we will continue with a more informal discussion focusing on digital euro and strengthening Europe's economy. And you will also get your chance during the fireside chat to ask questions. But for starting, I would also like to invite Mr. Dombrovskis to join us on the stage, maybe to take the middle seat. And for moderating this session, please come on stage, Madis. You can take this one.
Thank you again, Rainer, and thank you, Valdis and Piero, for your introductory comments. So the idea now is to have fireside chat. We actually don't have a fire here. I think you understand why. But we just imagine that I think we're like sitting around a campfire, or maybe since we're wearing suits, we're sitting in front of a fireplace and having an informal chat about digital euro. Actually, there are some people watching, but we don't mind too much. The plan is that I will ask a couple of questions to start the discussion, and then I will also open it for questions from the floor. So you can already think of your questions, and then I have some more questions once you have had yours. But maybe just to start and build upon what you both also said in your speeches. We see that people are less and less relying on cash as a means of payment. All the commerce is becoming more digital. We're using card payments mostly in Estonia for everyday purchases. So in light of that, how do you view digital euro as, is it more of a technical upgrade of the cash that we have, just making it digital for the future, or does it have a bigger meaning or importance for the monetary union or the strength of our currency? So that's a sort of a general starting question.
Actually, I find this way of thinking about digital euro as digital equivalent of euro coins and banknotes as a useful way to think about digital euro. And often when you think about certain functionalities of digital euro and so, often you are well helped with thinking the functionalities which are kind of closer to replicating what euro cash would do. So from that point of view, yes, and it's in any case expanding the use of central bank money, because currently the central bank money is cash, and cash is in decline, so that's a way to bring central bank money into 21st century, also thinking about all the monetary sovereignty aspects and so on. But at the same time, Obviously, there is more to it, so that's why both of us were talking a lot on the resilience and strategic autonomy of our payment solutions, payment infrastructures, something which we cannot, so to say, completely leave to the outside world, where we need to have control of our own.
Right. Piero, you want to add to that?
Well, yes. I mean, let me take this question from a pure central bank perspective, right? What do central banks do at the end of the day? We have in our mandate one simple thing: offer to the society means of payments, both at the retail level and the wholesale level. We have been doing that for centuries, if you want, right? Thereby constructing this healthy equilibrium between private and public money, which has served us so well for so many years, again, both at the retail and the wholesale level. So from our point of view as a central banker, we should keep doing this, providing liquidity and means of payments to the people, both at the retail and the wholesale level. And this is what we are doing essentially at the ECB. Now, for the retail, why do we have a problem? We have a problem because if cash is not, although we do our best to keep it in the society, the technological transformation and the preference of people are somehow marginalizing cash. Think just one simple thing. About 1/3 of our transaction is e-commerce transaction. You cannot use cash on that. So if we don't provide an equivalent to cash, we are restricting the freedom of our citizens to meet their needs on an important space of their daily life. Again, 1/3 of ours. So for us, is a mandate, is to fulfill our mandate to provide liquidity also at the retail level. That's why we need to do that. We are not here to decide how people should be paying. Let them choose what means of payments to use, but we should provide that. This seems to be a small thing, but has a very far-reaching consequences, especially in Europe. Because the marginalization of cash, the space taken by e-commerce is not taken by European providers. More and more non-European providers are stepping into this space, therefore making our dependency every day stronger. So as every day goes by, we become more and more dependent on strangers, especially that. So that's why, this element of keeping liquidity and means of payments available to people is so strategic. Because preserve the freedom of people to choose how to pay, and at the same time preserve or reinforce or help us to regain our independence in this field.
Yes. So I understand very well, and I think it's easy to explain the point that we don't want to be completely reliant on non-European payment solutions or card schemes for such a critical function as payments is. Now, you both mentioned also the difference between public and private money and the need to provide by the central bank, sort of the central bank money in addition to the commercial bank money that you use regularly when paying by card. This is actually something that I have found much more difficult to explain. So is it something that only the central bank economists care about, or do you think the fact that we need to have central bank issued money directly in the hands of the public is also that important that it's possible to explain it why it matters?
Well,
either way, Piero.
Yeah.
Well, depends who we are talking to. Huh? So communication has to be tailored depending to the audience you have in front of. But don't get confused. You know, my sense is that people understand much better than we think what public money and private money is. Let me give an example. As we know, so many years ago that we saw people lying before, you know, in front of a bank when there is some rumors about the stability of that bank. Moreover, as we discuss with people, we explain to them, people understand why people is so attached to cash, for example. Because it's easy to use, is inclusive, and preserve privacy. So, in some sense, people are able to distinguish the different form of money. And you can see, as I said, both when you see some tension, you see people going to cash, but also when we now test the people knowledge about the digital euro continuously, right? And they seem to understand. They say, yes, we would like to have some sort of money just as an alternative, just as a way out. So, for example, our latest figure is that 66% of the people that we interview are willing to start using the digital euro. Not bad for something that it doesn't exist yet. Why such? Because people understand, associate this idea of having a digital form of cash in the digital era. So I wouldn't be so skeptical. Obviously, here we are on a conference where people are very well educated, so they understand that this equilibrium between private money and public money reinforce each other. It's not going to be, we are not talking to competing with the private sector. We are talking about providing an anchor to the private sector money even in the digital era. So that's what we are talking about, and we should not shy away from explaining a little bit more complex concept, especially when you are talking to an educated audience.
Valdis, you're as optimistic, or you share the
views? I broadly share this view because indeed, if we talk about safety, central bank money is as safe as it gets. So from that point of view, it provides some additional opportunity and layer of reassurance for citizens. Also important element which I would mention, which features very much in public discussion, is a question of privacy. So we have designed this digital euro proposal with a high level of privacy in mind. So in a sense, central bank will know less about the people's transactions than currently commercial banks or credit card providers know. Of course, it's not going to be complete unanimity because we also have our anti-money laundering, counter-terrorist financing legislation. There is a risk of fraud which we need to address. So there are going to be some safeguards, but in a sense we have been having those privacy considerations very strongly in mind. Also, another element is this offline functionality, which again brings digital euro closer to cash in terms that it provides almost cash-like unanimity in case of those offline digital euro transactions, because those are transactions which takes in a physical proximity and so. And it also provides for a possibility to have those transactions, as I was mentioning, even in a situation when there is no internet or there is a power outages, there is still possibility to do transactions in offline digital euro. So it's add also this additional layer of resilience. So I think when we are having those public discussions on those topics, obviously it's just arguments that, you know, this is central bank money versus commercial bank money. It's probably not the only one which is important for citizens, but there's obviously more to it.
Mm-hmm. I agree. Now, Piero, you also mentioned the argument that especially when there's an issue of safety, safety about one's savings, and perhaps some concerns about the safety of a particular bank, then people realize the value of central bank and public money, and want to hold on to that. So that relates to the possible implications that having digital wallets where people can easily transfer their savings, what that could mean also for financial stability and the stability of our banking system. We have this debate about holding limits, so that it wouldn't be possible to transfer exceedingly large amounts away from a bank deposit to digital wallet. Now this has also become a sort of politically difficult issue, how high the limits should be exactly, and who should decide on that. So maybe on this process, Valdis, if you have a comment on how do you see that taking shape in the future?
Yeah, on holding limits, that's indeed something which we are putting in place. In a sense, we are limiting the store of value function of digital euro. And again, one can draw some parallels with cash in a sense that typically people do not store huge amounts of cash at home. So there are correspondingly also there are limits on this digital euro storage, having exactly those financial stability considerations in mind. And this was one of the indeed of stumbling blocks in the negotiations now on digital euro legislative proposal, because there was a bit of a tension between ECB, which was saying, okay, you know, it's monetary policy independence and member states, which were saying, yeah, but it's about financial stability and we have to be involved and so. But luckily we found this solution. So. Last week in Copenhagen, in Eurogroup meeting, we reached political agreement on institutional architecture, how this holding limits are going to be set. So I think we found a good balance between monetary policy independence and financial stability considerations from member states. So this is there, and then in a sense it will be for the ECB to set exact holding limit within the determined ceiling.
Okay, so there is a solution. But Piero, do you see financial stability as a major concern once we introduce digital euro?
Let me take a step back on this, right? I mean, this discussion about the financial stability, this is an issue that has been hunting central bankers for decades. Mm-hmm. And think about run on banks occur with or without digital euro. Actually, just think 2 years ago what happened in the US. SVB lost like 40 billion in a couple of hours. Mm-hmm. There was no digital euro there. Mm-hmm. So it's the digitalization itself of the minimum payment that makes much easier to move more money around. So financial stability concerns are there, regardless the existing of the digital euro. And to tell you the more, what's happening on the other side of the pond with stablecoin makes this risk even higher. Because in case you have a run on a bank, on a European bank, today maybe you move the money on another bank or some other assets, but still the money is in Europe. With the growing of American stablecoin, a run on a European bank means that we move the deposit out of the European system in the US. Mm-hmm. So the risk is there. Mm-hmm. And the central bank, the system, the ECB is at the core of the system. In our mandate is to preserve financial stability. So from the very first moment, we start thinking about this issue, how to avoid that, having a different way of central bank money for retail, avoid that this could add additional risk to the financial stability. So we have been designing the project in such a way to preserve financial stability. So we embed from the very beginning safeguard to the process. Let me mention some of this. First, digital euro is not remunerated. So it means that people would forego some small income that they can get from side deposit at the bank if they deposit that amount in the central bank money, in the digital euro. Second, we have this waterfall or reverse waterfall functionality, which allows people to pay with digital euro even if their wallet in digital euro is empty. So you don't need to pre-fund your wallet in order to pay for the digital euro. Let me give you an example. Suppose now I go downstairs and see a nice pair of shoes. If we were already in the digital euro world, and I wanted to buy that shoes, I didn't need to have already my 200 euros or whatever in my wallet to pay, because I could go and pay. The function would get the money from my account at the bank, transform it in digital euro, and pay. So for people, there is no incentive at all to move their money from the account, the bank account, in the digital euro wallet to pay. They can do that automatically. Third, only physical people can have access to the digital euro, so no corporation. Just to let you understand, the side deposit, corporation is a big chunk of side deposits. Mm-hmm. So these people cannot they have zero holding limit. Mm-hmm. On top of that was what Valdis was just saying. We are putting limits to the amount of digital euro that people can have. So at this point in time, the member state have decided the process to set the maximum amount. Within this amount, the ECB is free to choose the level, and we will choose it according to 3 principles, which are embedded in the legislation. One is the usability of the digital euro. I mean, to allow people to use it, the holding limits cannot be too low. The second is monetary policy implication, and the third issue is financial stability. Let me add one more thing, because this has to be clear. We do not put any limit on how much cash people can have. So logically, since the digital euro is an equivalent form of cash, in principle, we should not establish any limit of people about the digital cash. But we have the concern of financial stability. Mm-hmm. But we better be proportional on how much limit we put on the freedom of people. Mm-hmm. So the holding limits we need to understand that the holding limits is a restriction of people to hold central bank money, which is their money, our money. It's not somebody else's money. So we will put that. So the 3 principles that are embedded in the legislation will be put together, and this is what is going to determine the possible proposal by the ECB when the time comes.
Okay, so I suppose one can conclude that we have thought about financial stability implications. The holding limits are there in order to provide a safeguard, but at the same time, the risk of bank runs is nothing new, and it has always been there, and there are other ways banks can still run out of deposits and have a liquidity problem. I wonder if there are any questions from the audience. I have, of course, some more, but we have microphones. I can see 2 already, one here in the front. And please introduce yourself also, and then go ahead.
Yeah, Marko Pahor, Banka Slovenia, also member of the HLTF on digital euro. So there's one, I think it's important issue was not touched in this panel, and this is a great panel to touch this, and it's the instant payments. Now we've seen it, at least on the surface, that the banks and the PSPs in euro area really stepped up their efforts of doing something with these instant payments. EPI is talking to smaller PSPs that have their own solutions to maybe adopt Vero instead. There's big talks about interoperability between different operators. And also, we've seen that the rapporteur in the European Parliament is a big advocate of private solutions on instant payments. So how do we respond to that?
So I guess the question is basically about the private sector solutions to the problem that we're describing. And why do we need a central bank push here necessarily? We have maybe some private sector alternatives, but do you want to, Valdis, comment on that?
Yeah, okay, on instant payments, indeed, this functionality is improving, but at the same time, we still do not have pan-euro area private solution. Also, the European Payment Initiative, which you mentioned, it's how many member states? 6 plus minus 5 maybe even now, yeah? So it's a limited number of countries which are involved. It has not really yet picked up. But obviously, when we were designing the digital euro legislative proposal, we had also those private sector solutions in mind and thinking about complementarity with the private sector solutions using to extend possible existing infrastructures, and also thinking about remuneration models, because obviously when we are setting up a digital euro, we have to find the right remuneration model, which so that it's interesting for payment service providers, including banks, so that it's interesting for merchants. And I think this issue will be to a large extent solved by the fact that the ECB will be providing this infrastructure without charging any kind of scheme and other fees. So that will be an advantage for payment service providers. And what we are also proposed, in a sense, is have a cap on merchant fees, because it's clear that if we put a legal obligation of merchants to accept digital euro, because that's what legal tendered status does, it's important to ensure that they are not overcharged. And all in all, we see that what we'll be able to achieve is fees for merchants which are lower and more transparent than what current payment like international card schemes are providing. And actually, just last week we had a event on digital euro in Brussels, organized by Bundesbank, focusing exactly on this merchant perspective, and they were very much emphasizing this, that very much also when looking at initiatives like European Payment Initiatives or Vero or so, that it's not just replicating what the international card schemes does in terms of fees. So that was a major concern for them.
Mm-hmm. Right. Piero, how do you see the private sector role in this?
No, I mean, yes, this is a very important issue, but let me go back to what I was saying before about the, the coexistence and the healthy equilibrium between private and public money. We are discussing the same things. At the ECB, we have been advocating and asking and supporting the private sector to develop a pan-European scheme. We have this European retail payment strategy in which we have been advocating for private sector to scale up at the pan-European level for many years. And we have been supporting any private initiative in this direction, because for us it's essential that we solve this dependency as soon as possible with all the possible means. So we have been encouraging. And the Digital Euro project is not against the private sector, will support this private sector effort to scale up at the European level. Let me give you actually three simple reasons how we are doing this. First, co-badging. Private initiative could co-badge with the digital euro, thereby providing to their clients coverage. So their client could pay not just where the private sector solution is accepted, could pay everywhere in Europe with one single means of payments, thereby saving fees that that the banks now pay to other solutions. Second, because the digital euro is legal tender, Valdis was saying that all merchants need to accept it. The standard that the merchant will use to accept the payments of the digital euro are open standards. So private sector solution can use the same standard to roll over Europe, their own solution, not the digital euro, their own solution, thereby making easier for them to scale up at the pan-European level. Today is so difficult because it's costly to expand your own private acceptance network. It's extremely costly. The digital euro would provide that for free because it's a public infrastructure. Mm-hmm. But there is one dimension that we do not discuss so often, but is key. The digital euro, it's the technical infrastructure, the back end, will not rely on scriptural money, which means, an entry in a book. It's something more sophisticated. I don't want to become too technical, but it's so sophisticated that allows us to exploit what we call conditional payments. Conditional payments could be the future because it allows you to condition the way you use money on many dimensions. Today, we condition the use of money on one dimension. Pay Valdis this amount at this point in time. What if we could enlarge the scope of conditioning? Pay only if the train arrives in time? Pay only if my goods have arrived to my door and not before? And you can embed many other solutions. That's not the ECB dream. This is the reality. We just launched a call for idea, and Friday we published the result of this call for idea. I invite all of you to read this report to see how many ideas private sector is suggesting they could develop on the conditional payment solution. This is another way through which private sector could leverage on the digital euro.
Just to add my own comment on this, and the way I've looked at it is also, of course, that we want different methods of payments complementing each other. So I would be very happy if we also had instant payments-based payment methods available in Estonia. I hope we will, and then I hope we will also have digital euro as an alternative so people can choose. The problem with those initiatives so far, the instant payment based ones, for example, is that so far we do not have a pan-European solution that would have been successfully rolled out everywhere. And another issue is that this question of resilience that at least we in Estonia consider very important, that you would also make offline payments if people are not using physical cash anymore, that would not be there with instant payments. Mm-hmm. And just to complement, Piero, what you said previously, that there's not much incentive for people to hold too much digital euro in their wallets because there's no interest payment on that. I think we should still encourage them to have a little bit, at least, for this, for those emergencies, if there's a breakdown in the other electronic means of payment. But looking at the clock, I think, well, I have many questions still, but I promise to give another one to the audience, so please.
Thank you very much. Good morning, tere hommikust. My name is Jaakko Vero. I'm head of the Financial Stability Authority in Finland. So we are the National Bank Resolution and Deposit Guarantee Authority in Finland. And I would pick up on this question about resilience. both in the online and offline form. So my question would be, how do you see the kind of resilience and preparedness by design in the online version of the digital euro? I heard from Mr. Cipollone that you're planning, for instance, to have 3 or 4 regional sites through which the digital euro technical operations would be managed. This is, of course, I think very much of interest to us on this side of the Baltic Sea. Also knowing that, for instance, ECB target services are mainly operated by 3 big central banks, somewhere very close to the Alps. So how have you been considering this issue within the ECB? How do you see this regional dimension? Can we expect that maybe we would have one of the processing sites for digital euro on this side of Baltic Sea maybe? How do you see this? And on the offline topic, I understand that the offline functionality is seen very much as something that would bolster the preparedness and resilience value added of digital euro. So just to make sure, can you all confirm that it is your view that if the governing council will decide to launch digital euro, that offline functionality will be available from the day one, and it's not being considered as a separate value-added functionality of the digital euro? Thank you.
Thank you for excellent questions. I think we have to be pretty quick with our responses looking at the clock, but please, Piero.
So I can confirm that the structure of at this point in time, that the back end will be distributed on 3 regions. But this is because we tender the back end from at the Eurosystem level. There is an alliance of central banks that are providing the central bank. So at the end of the day, it's their choice where they will locate the center. This is safer than target services. It's safer because target services is 2 regions, 4 sites. So this is much more resilient than that, because this is at least three sites. So this is much more resilient than the target service, which is already very safe. On the offline, I can confirm that the intention is to start from day one, because it's so important for resilience that definitely it's not just resilience; it's also inclusion. So for us, day one is the day in which we will issue the digital euro also on the offline.
Well,
I can just confirm this.
You're confirming it as well.
Yeah.
So am I. So from my perspective, the way I view the main arguments, first is really the need to have a European solution for payments that would be available in every, at least euro area country. We wouldn't be dependent on a foreign or service provider from outside Europe on a critical function. And indeed, this resilience is the second important consideration, and offline payments being an important part of it. So I hope it will be there for day one.
Now, let me add something. The whole infrastructure of the digital euro will rely on European providers owned by Europeans. So the resilience and the strategic autonomy is built in the process from the very beginning. So this is another layer of resilience, if you want. It's a different kind of resilience, but it's an important resilience as well.
Yes. So this, ladies and gentlemen, was just an introduction, because we will discuss all of those issues in greater detail now in the following panel discussions. But I will just want to thank you, Valdis and Piero, for coming to Tallinn once again and for providing your contributions to this discussion. Thank you very much.
Thank you.
My pleasure.